Hello, welcome to today's analysis of the NQ and a little bit of related markets. Actually going to do some related markets today. It's probably going to be relatively long video. Just going to try and cover everything, even though making this video last week might have been a bit different because the NQ is just doing whatever it wants, but still it's good to have levels marked and all of that good stuff. And I'm going to make another video after this just looking at yen, because I use yen for the NQ, but as a result I have some analysis on NQ, and I might as well just on the yen, so I might as well just share that as well in a different video. It might help people who trade forex. First, I'm going to look at immediately what the NQ is doing. So, where should I start? Okay, let's start on a mid time frame. Let's start in the 12. The 12 is pretty good at the moment. What happened last week? Well, I don't remember when the last video I made was. This push down was nice. It was nice to get some supply. Did pretty well in this. And we came into this pull here. It was a bit iffy around this low just because of how we behaved. And we were coming into a mitigated block. But we did get absorption. We got all of the nice signs, change of character. I have a 12-hour little fib tool down here, and I wonder why. So I'm gonna have a look. Yeah, I would still mark this this area as kind of this area here as kind of unresolved, which is marked by this guy, right? So this is midterm structural break, right? I didn't get everything I wanted to see down here in order to kind of call this area properly dealt with. This, I don't normally call this. It's a variation of my logic, let's say, for an area to be satisfied, but it doesn't fill everything. It didn't come into any blocks or anything here. It was a bit kind of isolated, but hey, it made the push up. Then we had this push down. We took liquidity here, kind of technically liquidity, and then we got just kind of a straight push up from there. Was that Friday? No, that was Tuesday. Friday we broke out. Kind of. Friday we came up to here. I would still expect price to come back into this area, which is why I have levels marked here. Yeah, I was kind of waiting for this 2-hour block to kind of get hit, right? Have like an external grab. If it did, and we had some nice PA around here, let's say price came into here, and then we had kind of washes around here and then came up, I would be a bit more, I'd be treating this area differently, but anyway, we had the good stuff. We came onto an anchored VWAP, had a little cheeky change of character here. Kept taking very internal liquidity, besides this one. This one's nice, but the rest was kind of very nested liquidity. I'll explain what I mean by that. So you can see here before this change of character, the last significant wash, liquidity wash that we had had two. I would say it's this one, and inside this consolidation was pretty nice. And instead of coming just and taking this inside this area, right, which I would say would be nested, and it would still be creating the kind of idea that it didn't take as much money as it could, right? If it just stayed in here. And if that fueled the push up, I would just be a bit cautious about that zone. Normally that leaves kind of equal lows or whatever. When it oversteps its welcome, let's say, and takes this, could say that this is like an external grab, because it kind of breaks through all structure as it's being made and then pushes up. That's why I kind of like it as the idea of a wash. It washes kind of both sides of the supply and demand of this little zone properly, and then we get the push up. So that's nice. Like if you can see here, this is a tiny little internal thing. If we came down and took this low, and then we broke up from here, that would be much nicer, right? I would say that would be a nice external grab, but this is just internal. And we kept doing that all the way up. And actually, even here, it was, it's a bit precarious. We have a little zone, 29,392. I like this area for a long, perhaps, if we come into it nicely. But other than that, I would say definitely breaking this low and not getting absorption around here. I could see us maybe kind of widening structure, so we could dance around and then come down and get little bounces, little dead cat bounces or whatever. If we don't get kind of a crazy buy up from this point, I could see us dancing around and just kind of, if we lost this zone here, I could see this perhaps being a little short, even if we come down into this 2-hour block, or if we, create this kind of like temporary top. What's the probability of that? I mean, it's not extremely likely. From here, we could wash 30k a bit before doing that, and put in a kind of temporary top. But look, I just have my levels. I know what I like to see at those levels. I know what I don't like to see at those levels, right? And what I don't like to see can in hand lead to kind of counter position, right? So it's somewhat of an invalidation. But an invalidation for me is also kind of, it reinforces the opposite side. It's kind of how my system works, I guess. I don't know if it's the same for everybody else, but there we go. So yeah, like this gap, this is ugly, but kind of learn to not focus on gaps like this because, well, especially with the NQ anyway, it can just be like, to hell with your gaps. We're gonna make you look at that for forever. So I just stick to contextual causality. Let's say this gap led to this, right? This breaker structure. If we get a good enough signs inside above this gap, you still have to be careful, right? I wouldn't be taking like I did not take a trade here, because of the context, also because of the timing models and what PA was doing at certain times. Didn't like it. But once we kind of got this break here, this internal break, I took a long, and I'm still in it, but I closed most of it around here. So it was nice, 2.3. This is, it's a nice little long. I'm happy with that, especially given the context. I'm happy with that. I'm gonna leave like one contract run until maybe here, but I mean I've taken most of my profits, so I'm happy with that. So that's the kind of trade I'd be doing above this kind of gap. Honestly, I wouldn't be, huge reversal, super confident, like tight stop loss here. I just wouldn't be taking this, given the context. What is the context? We had this consolidation up here, right? Which was mainly bank holidays for the US and for the UK. I still got a little couple of trades actually yesterday. I don't normally get them. This zone's interesting. We are right below 30k, which obviously people would be like, ooh, 30k is right there. Are we going to grab it? There's a chance that we induce this more. I wouldn't be surprised if we get one more push down inside of where we are. Whether that comes to the gap or not, I don't know. But I mean, also look at this big old curve here. We have to respect the structure that's being made, and we're in the kind of second stage of a bullish break, but it's getting weaker. But all of this structure is so tight down here that and also we didn't really hit that's wrong. We didn't really hit the gap at all. So if I was seeing this PA after closing this gap, then I would be treating that differently. But we have to respect the fact that we are in locally bearish context, especially with this, right? See how many hits they did internally here? I can't drag. 1, 2, 3. And then we had the fourth one here. That was a lot of like swipes inside. Now we do have like flat highs here. So this is going to get taken at some stage. What do I think's gonna? What could they do today? Well, if I look at my models, my timing models, it might give us some clues. So I'll bring you up here. Top. What happened? Well, we have. Sorry, I'll make this bigger. We have the blue zone, which is this is Tokyo close. So this is around the time that Japan and Greater Asia will close, and this is UK open. Right? We had a mitigation. Sorry, I don't know what's wrong with my cursor. It's won't let me click. I might have to clean my mouse out internally. We had this mitigation of a 12-hour gap down here, and we just kind of pushed up slowly from there. This tells me, and actually, I mean, giving kind of clues, we could be in this guy, which is a bullish model, but it's my flush and push the long consolidation. So we had the flush. We had the push, with no retrace. Check. Consolidation, not really yet. This could be the start of it, right? And actually, the main trade here, which is kind of why I took most profits around here, is a counter precedent or counter bias, or whatever you want to call it, scalp opportunity, which comes in around the gold point, which is US pre-market-ish. Oh my god, I'm so sorry. It's so messy. Around the gold, so that would come, it's around midday. Midday is tricky. So it's a scalp, it's small, but it's been consistently the more likely trade. It might not be the bigger trade, you know, but it's over time I've done this. Getting a short on this kind of situation is statistically a better thing to be looking for. Now, obviously, you can see here, it says use discretion for target, obviously. But then it comes deep into this push, and a lot of the times it can that can be kind of greater structure being made, right? So instead of it being tight, it can kind of come back. Oh my god. Come back in, do a big old flush, and then continue on. Like, completely possible. So a little scalp. I'm not going to be trying to catch the long. I'm not going to be trying to catch the long. the big long in this situation. Is there more to look at? There probably is. I haven't done many of my levels. Down at this zone here, there's past daily VWAP. Let's mark that out. Past daily VWAP. Where even is it? I always find it hard to find this one. Obviously, its icon isn't as catching. Where is it? Am I blind? Oh, there, that one. Yeah, I don't know. I need to change that icon. That's the view up down here. Just reinforces my idea of coming into that zone. Do we have many more below us? Not really. I have, so I'm using this program. This is Deep Charts. It's the order flow. We're on the 2 hour at the moment. But it can show you some good stuff. It can show you clusters of past VWAPs. And if you see down here, 29,305, there's a big cluster of VWAPs down there, which you can see on the main chart, which is what I was just talking about. 29,305, it's a bit lower, but yeah, this zone is interesting. I'd like to see what we do when we come down here, if we come down here. All right, that's NQ. What about other markets? What is NQ reacting to in general? Well, not much else than earnings and just kind of moving up. Let's have a look up here. Actually, I'm going to bring this down. This here is oil. Oil's on the left. Oil seems to be getting some kind of absorption at this structural point. They had a big gap, which we seem to tap into. But we are getting money flow absorption down here on oil. Interesting. I had this area marked here, 109.065. This is a very strong area for oil to sustain itself above. And you can see that it didn't. And now we've come back down into the structure. So obviously you'd think, oil goes up. Oil goes up. General indicator that stock market would go down. Not necessarily so recently. It doesn't seem to care. Dollar's holding out. The interactions between dollar and the stock market haven't also been having much of an impact. Tracking dollar can be good to see the overall sentiment, but I have not been using it really for my trades recently. Gold. Gold seems to be basing out kind of around here, but I wouldn't be surprised if it just keeps ranging. So I haven't been using that much either. The truth is, the NASDAQ has kind of just decoupled from traditional macro indicators, right? So even the yen has kind of been iffy, but it has been giving me way more of an actionable thing to use, or phenomenon to use, or behavior to use, however you want to say it, with the NQ. In relation to my carry trade indicator. So I got a nice trade here, and it was actually the short on the NQ, based on this small little zone. Now I know this chart looks really ugly. This is the spot Japanese yen to US dollar chart, and I might move to futures, but I like using the spot one just because, spot's actually what they're doing with their money. But I do compare it with the futures chart, which is this. So I will compare the spot chart with the futures chart, but I generally use the spot chart for my TA in regards to the indicators. Maybe I'll change. I know it's ugly, but it works for me. So what's happening right now? Well, so we are in a weekly order block. Man, if you want to see the asset that does the longest, most drawn out retracements ever, then just go to yen. It's crazy. Like it's done it here, and like this was crazy. Just this drift down. But anyway, we're hanging out above this 12-hour gap mitigation. You can see it here, this line. So if I change this to the 12-hour, you'll see that we have a gap here that we can tap into. We're hanging out right above it. It's also our floor. So the floor for me is where we had significant deviation in price and the CTR indicator. And it's so significant, and it created a huge change of character. So my floor is around here. This is the zone. Could come a bit below it, but as long as we quickly get above it and use it as support, then this idea of this change of character and its impact on the stock market stays in play. Right now, we're hanging out just above that 12-hour point. Then I thought maybe we could be doing some inducement. We did get some nice money flow absorption here. So we have this guy, and then we came up, and then we had an internal 45-minute hidden div, which I marked. We got, this is actually like an internal kind of structural break. That's why I have it marked here. You could call this a little bullish change of character. Obviously, it's nested in this push down, but this was significant enough for me to look at CTR, and I saw that we had a big divergence between price and CTR. Notable is it also came into between these two lines. You see the green and the orange line. It was referencing this point. That's a good setup for me to compare it to what the NASDAQ is doing and maybe use it to inform a trade. Which I did. So we had a little floor. This is my internal floor, floor 2. You can see we tapped it around this point here. It was holding. Oh my god. I need to fix my mouse. I'm so sorry. It was holding and using this down, DWN, that's CTR down. Using this context, I took a short on the NASDAQ yesterday. Let's have a look at it. It was based on this 24-minute. We got the internal push. It was actually just before close. It was around US. No. Yes, it was around US. Let's see. Let's just go into this for a second. So we'll find the time on the yen. It was around... So we mitigated that there. So let's say 7 o'clock until... Wait, this is UTC 9. Sorry. This is still on Japan time. It was... Oh, no. It was okay. 10 o'clock until... It was around here. 6. That's about 6 hours. That's most of UK. So where was that short? Oh, it was during UK. Yeah. This absorption here. I took a short down. Probably from after this liquidity grab in around here. Yeah. And it was nice. I felt fairly confident about it. And then you can see when US opened, they kept coming into that area. And I'm pretty sure I actually took another short in US just because they came into that area again. Didn't break. And then I saw CTR holding out and the yen holding out. And you can see it's led to a significant drop. Now, if you look at the yen, you go, well, Glenn, the yen moved down and the NASDAQ kept dropping. So what's up with that? Well, structurally, we're still, I know this is my floor, right? But until we break this and break down, we're still inside this. This can just be liquidity for this zone. This. CTR has done nothing significant. right? You could say, well, Glenn, it's pushed up here. It has, but this point corresponded to here. I'm looking at this structural break, right? And this just doesn't, this isn't immediate enough. This isn't, we had this push up before structure did anything, right? So for me, it's neutral. For me, this is just ranging right now. And I'm going to take this CTR down as my main driver until this is completely negated, which would be structure breaking down here. And I mean structure breaking down slowly with pushes down and CTR moving the opposite way, as in moving up. That's when I would start to abandon my short idea. And it could happen. We have green vector coming into red here. It could happen. But even now you can see like the stock market moved up, but this does seem just kind of like building a new structural area in a bearish downtrend, right? So not much of a change yet, anyway. But I used it and it worked out. Yeah, so speaking of yen, I'm going to go do a video on yen now. But right now, guys, stock market's kind of just nuts. I'm just sticking to my models. I'm sticking to using my yen divergences when I can. And yeah, we've so many levels below us that just have not been cared about. This thing's just floating up and it's just not stopping. So I'm still going to mark the levels. I'm still going to keep them there. But it seems like very immediate and internal catalysts are just doing the job for the stock market to keep pushing up. So until we see some kind of crazy macro change, these levels are probably just going to sit there for a while. Which is fine. I'm not going to run out of space for all of my lines. So I'm just going to keep them there. Anyway, guys, that's it for the NQ bit. I might be missing whatever shorts I was talking about earlier, but that's fine. Video is more important right now. All right, let me know if you have any questions, and happy trading, and I'll chat to you soon. Bye.